Why Miami became the most expensive city to invest in. Hello, everyone, and welcome back to another episode at Nova Rise Invest, your channel for financial education. So, today we're going to talk about Miami. What's happening to that city? What's causing the ridiculous surge in prices? And can you still make a living in it, or can you even invest or buy a property in it? And if investing in Miami is still feasible, what should you pay attention to before making that decision to go all in? So that's what we're going to talk about today. Let's get started. So here we have an article from The Real Deal. That's a South Florida real estate news source. And as we can see here in the heading, Miami becomes the least affordable housing market in the United States, with home prices that are rising at a faster clip than wages. And as we're scrolling down, once again, the article reiterates that Miami is the most expensive housing market in the country, surpassing New York, according to the Realty Hub report. Now, you might be wondering what's really causing it, right? Well, according to this article, home prices in Miami have soared during the pandemic, propelled by the immigration of out-of-state buyers and renters. So it's not just buyers, it's renters as well. Many of whom have moved from the Northeast. So we're talking about states like New York, Massachusetts, Connecticut, right? However, sadly, wages have not gone up at the same pace as the property prices. So that means affordability has become an issue because, according to what we see here, a household in the city of Miami would have had to contribute 78.7% of its income towards homeownership costs, according to Realty Hub's February Affordability Index. So that's based on a median household price, that meaning the price right in the middle of $589,000. We're talking about over $500,000 for a property in Miami. And I remember a couple of years ago, not too long ago, one could easily buy a property for $200,000. And that was considered expensive at the time. So fast forward to 2022, now we're facing that the median home price in Miami, it's $589,000. And the projected median household income, it's only $43,401. So as you can see, those dollars are being squeezed out. Miami has moved higher in the ranking of the least affordable cities for housing in recent months, and it has passed Los Angeles in October to take the number 2 spot. New York became the second least affordable city in February. And a household in New York City, since we're comparing numbers, that household would have had to spend close to 78% of its income on home ownership costs, and that includes mortgage payments and property taxes. And when you translate those numbers to New York standards, we're talking that a family in New York, a median household, it's making roughly $68,259. But here's the key. The median home price in New York is $970,000. We're talking about a property that is close to $1 million, right? And since we're comparing cities, right? First, we got Miami. Second, we got New York City. And third, we're talking about LA. So LA, one can expect that a household will be spending somewhere around 74.2% of their annual income. And this is based on a median income of $68,733 and a median house price of $925,000. Once again, close to $1 million. That's not news. What's actually new is this number right here. $589,000 for a property in Miami, right? So as we keep scrolling down, the article highlights that ideally homeowners or renters, they should spend no more than 30% of their income on housing. That's how you can afford to have a comfortable lifestyle. But when you're paying more than 70% of your income just in the cost of living, just in your roof, there's an issue right here, right? Like we're talking about affordability, it's being squeezed out. You're certainly not living a comfortable life up to this point. And this is not only impacting housing prices, the same issue is happening with rentals. And according to this article right here, also from The Real Deal, rents are exploding nationally and Miami is topping the charge, right? So as we're scrolling down, we can see here that Miami and Tampa, their rent skyrocketed 38%, and that's the highest gain nationwide. We also have other cities in Florida like Orlando, Jacksonville, and St. Pete that have their rents gone up by 32, 27, and 24% respectively, according to a new report by Zumper. And these are extremely high numbers because if we were to scroll down and compare the national numbers right here, you can see clearly that nationally rents are up 11.6%. Yes, still very high, but when you compare this with the Florida numbers, it makes this percentage seems small, right? In fact, there is a list right here provided by Zumper that highlights the highest rent growth year over year in multiple cities across the United States. So as you can see here, we have Miami, Florida being number one. There's Tampa and then Orlando. And once again, that growth, it's definitely a lot higher than the national average. We're talking about 30% plus. As we're scrolling down, we see New York here at 32.4. But what really caught my attention is to see Henderson, Nevada, and the list. Actually, I was out in Nevada early in the year in January, and I happened to pass by Henderson, and I was surprised to see how much construction is happening in the area because it is relatively close to Las Vegas. This is only a half-hour drive, maybe even less without traffic. So it seems that a lot of the residents have been squeezed out of Las Vegas, and they're moving out to the suburban areas like Henderson. You can actually see Vegas from Henderson. So that's how close it is. And the rent growth over there is actually a 25.20%, still a lot higher than the national average. And as you scroll down, you see other cities like Nashville, Tennessee, Knoxville, Scottsdale, Phoenix, yada, yada, the same cities that we've been talking about over and over the past couple of months. Now, back to this article. What can you expect happening in the future? Like, are you expecting rents to keep going up at this crazy rate? Well, let's see. Let's find out. So according to this article, they're highlighting that rent growth has actually, slowed down in the latter half of 2021. So according to the statistics that they're showing here, although rent rose as much as 2% a month over month in the summer, that velocity has slowed down in the fall. And in February, rents nudged down, dipping 0.5% from November. So the expectation is that rents are going to stabilize, right? Now, I want to highlight something here because depending on where you are, whether you're a renter or a real estate investor, an owner who's renting a property to someone else, you might perceive the situation as something good or something bad. But before you jump into conclusion, I want to ask you to take a step back. Yes, on the surface, it may seem that this increase in rent is impacting the renter a lot more, that it will impact the real estate investor. But not all is golden, not all is good news. Yes, the real estate investor is getting a higher cash flow, quote unquote, because of the increase in rent. But keep in mind that property prices are also going up. So that means whatever cash flow that investor got in their pocket, that person also needs to pay a higher rate in property taxes. And not just on property taxes, the cost of maintaining that rental portfolio, because every operating cost, it's also going up because the cost of living in that area, it's also going up. Now that we get that, let's go over your options. What are your options? If you are a real estate investor, right? Let's say you got into the market a couple of years early, you managed to grow your net worth thanks to the increase in property prices, and you managed to get some extra cash flow. Now it is time for you to make a decision. Do you want to go ahead and sell and capitalize on the growth and simply move that money through a 1031 exchange and buy an even larger property? Keep in mind that property prices are really, really expensive right now, right? Or should you just pull out the equity out of those properties through a cash out refi and maybe use that money to expand your real estate portfolio in Miami, or maybe in a new area where you can maximize your investment and maximize on that cash flow? So those will be your options, right? Take advantage of the growth in your net worth. Now, if you are a renter, consider your options as well. Let's start with your job, right? Is your job flexible? Do you really need to be in there in person? If not, maybe you could relocate to a city that it's a lot less expensive, maybe in the outskirts of Miami, or why not, maybe further up north in Florida where housing prices are a lot more accessible. And why not? Maybe just consider moving out altogether to another state that gives you a lot more perks. Yes, there are actually states out there who are giving out incentives to not only attract new residents, but also attract new talent into their state. And your incentive, it's on the monetary side. So if you're curious about finding out what those states are, I invite you to check out this episode right here on the side so you can learn about the states that are gonna best fit your needs. I'll see you in the next episode. Take care. Bye-bye.